Man. Ah, man. So let's do this real quick. So for this, we cover in zones, right? So just like last time, we covered zone, but I realized that you didn't understand the full gist of it. So before you even get to the videos in the academy, I'm gonna show it to you. So when you do watch the videos and when it comes to making your homework, it will be exactly the same thing. Especially remember when you did your double bottoms and double tops, the setups and the homework, it will be the same thing. So watching the videos again, it will just be reinforcing what you already know. Now, with everything that we do, right? With everything that we do, I always want to make sure that we talk about our rules, right? Now, the rules we are talking about are pretty much the trading rules, right? As far as your trading log, how you document your trades, all that goes hand to hand. Oh, also, while you at this, can you do me a favor and take a sell on GU? If you don't want to, it's okay. We could go over it later on as far as why. Okay, you still with me? All right, cool. So let's go over the rules real quick. Do you remember the rules? Your trading rules, the four rules. All right. So what's one? What's number one? Rule number one. Okay. Can you? Okay. You said monthly, weekly, and daily. Okay. So what does that mean? Okay. Can you tell me a bit more about it? And you are correct, by the way, as far as the time frame we're looking at now. Why are we looking at the monthly, the weekly, and the daily time frame? That is correct, 100% correct. So you're looking at the general trend of the market, meaning you want to know if the market is buying up, and you want to know if the market is selling down. So with that being said, you want to make sure the overall trend is bullish or the overall trend is bearish. And when you're looking for your setups, if you're looking for buy setups or if you're looking for sell setups, either a sell where you get a double top, right, or a buy when you get a double bottom. Also, another sell when you get the break and retest, or a buy when you get that break and retest, so the break of previous structure. But you want all these setups to be based off the higher time frame, either the monthly time frame, the weekly time frame, or the daily time frame. All right. Okay, so that's done. Okay, let's talk about rule number two. What's rule number two? All right, 4 hour time frame. Okay. Okay, so 4 hour time frame, H448. So can you elaborate on that, right? Rule number two, 4 hour time frame. All right. So can you elaborate on that? Can you tell me a little bit more about that? Okay, so that's a time frame. All right. So again, okay. So you said that's a time frame we use to trade, which is perfect, right? But to be more specific, right? To just to add a little bit more to what you just said, right? It's the time frame you use to enter your trades. So you're not wrong. I'm just, just adding a little bit, you know, that's the entry time frame. Okay. So H4 time frame is what you use to enter your trade. That's going to be the lowest time frame you use to execute. Okay. Now remember, when it comes to you take trades based off the daily time frame predominantly. That means most of your trade, or 95% or 75% of your trade, is going to be available to you at 4, because my 5 p.m. is your 4 p.m. Okay, so it's the end of the day. So you're looking for the end of the day to get your PA. So let's talk about rule number three. What's number three? Okay, perfect. Right. So your price action. Rule number two. I mean number three is PA. Right. Okay, price action. Now, what can you be more specific when you say price action? There we go. Yes, that's what we're talking about. Correct. So when you say price action, you have to be more specific because a lot of traders, traders out there, when you say price action, they learn different type of price action, but you are using the price action that the market give you every single time, either one before it buys or before it sells, right? So you're looking for the engulfing price action, right? So correct, it has to be the engulfing price action, either the bullish engulfing, like you said, right, or bearish engulfing. Okay, because the setup's either going to be a buy setups or a sell setup. So yes, rule number 3 is PA, the price action that you wait for, that indicate, hey, buyers have taken over or sellers have taken over, and that's the engulfing price action. So what's rule number 4? Correct. All right. SL rule number 4 is stop loss. Can you tell me a bit more about that, please? Correct. See that? There you go. That's what I'm talking about. So stop losses, which is your SL, that you have to place either at the last high, right, or the last low. There you go. Easy work. He helped you out just a little bit. No, no, no. I understand, but you guys are more in tune now because you know close just as much as him. Yes. There you go. There you go. So last high or last low. Okay. So we could add a little bit more to it. So let's just put the rules to the side real quick, just so we could emphasize on that. All right. All right. Just for the stop loss aspect, because I want to make sure that you truly understand stop loss. It's not just placing the stop loss, and of course, why we place the stop loss at the last high and why we place the stop loss at the last low. Right. So you said, of course, rule number, all right, 4 is SL, right? And that is your stop loss. There we go. Boom. Right? So for a selling setup, meaning if you take a sell, meaning if the market give you a setup that looks like this, right? What do you call this setup right here? That is correct, right? It's a double top, right? It's a double top because one, the market went to the specific area, it stops. Because it stops here and it start going down, we're just gonna place our zone. We place a line, right? We place the line for when the market come back to the zone, and we look to the left, right? You remember why we look to the left? There you go. But it's not just why or where it stopped at, but more of a, when it stopped there, what did it do? What kind of candles did the market give us? Especially what price action did it give us before it sells? Make sense? Let's just say when the market got here, it gave us something like this, right? It sat there and then it gave us a bearish engulfing. So when and if the market come back here to the same level, it might consolidate, meaning it might sit there for 2 or more candles. Make sense? Because you understand, last time that's what it did. Now, if it doesn't sit for 2 or more candles, sometimes you'll get that one candle that engulf the last 2 or the last 3 bearish candles. Does that make sense? Okay. All right. All right. All right. All right. So remember, we look to the left to see history, to see what happened last time. Based on what happened last time, we can anticipate the market to give us somewhat the same thing. Now, I'm going to minimize this, so we know we got a double top, and we're looking to take a sell. Use this real quick. We're looking to take a sell right here, right? Do you know what kind of price action we're looking for? Rico, what kind of price action are we looking for? Correct. A bearish price action, right? One of your sixes, right? One of your 5 price actions. All right. So let's just say we got a 2 candle price action. Remember what I mean by that? A 2 candle price action. I could be more specific as far as a 2 bearish candle price action where it took 2 selling candles to engulf or to overtake, right? The last buying candles. This is where you would enter for the market to go down, right? Now, let's just say this was a bullish, a bearish trend where it was giving you lower highs and lower lows, right? So this right here will be your lower low, and up there would be your lower high, right? So if we take the sell here, we put a stop loss at the last high. So SL will go right there. So that's what we mean when we say last high. Okay. Now, if you get a regular double top, right? If you get a regular double top and you don't have a previous structure like so back there, normally what you would do is you're gonna look at the candles. Now, I'm gonna emphasize on that a little bit. We're gonna look at the candles. So the candles we're looking at is to the left. Remember how we look to the left? Yeah, we look to the left. We're gonna look at the last bullish candle and the last bearish candle the market give us. Right? Let's just say if the last bullish candle looks something like this. Hopefully you can see it. You can see it, right? All right, let me, I'm gonna change the color of it and I'm gonna make it a bit thicker. That way it can stand out more. So I'm gonna use this. If this right here is the last bullish candle and this is the wick of it, and then this will be the bearish candle. We're gonna do a 1 candle engulfing, okay? And that'll be the wick of that, right? So if you pay attention to the last candle, right, in this current candle, the last high would be the last wick high, right? And the last wick high would be this. Make sense? All right, so that means you will be placing your SL, your stop loss, above there, right? Because that's the last high we have. If we don't have a last, go ahead. Go ahead. Okay. Okay, so the take profit normally goes at the next structure. Next structure low, because it stops here, it went up, right? When the market falls, it have to go past this structure first, right? So it will be this structure. Okay. Now remember, we taking our setup based off the daily time frame, right? Meaning if the technical analysis double top is in a daily time frame, and we take our sell, that was the last low on the daily time frame. So this is the area you'll be targeting as far as your take profit go, right? Because if you hanging onto it like the daily, because you're taking a daily setup, you're looking at daily TP, you're looking at daily take profit. Make sense? All right. Now on the 4 hour, it's gonna be the same double top, but within here, right? Within here, you're gonna have infrastructure, meaning if the daily candle's looking like this, right? The 4 hour candles will be looking like this. See how it went down? As it goes up, it's giving you infrastructure within it. But all of this is one part of the daily. Yeah, it's like smaller, right? It's not full. Yeah, because remember, you went in the 4 hour to it pull the trigger, right? That's you and me in particular, because I prefer to take daily price action because it makes my life a lot easier. Because all I got to do is just wait for the daily engulfing, bearish or bullish. Boom, I'm done. And that allowed me to take 1 trade, 2, maybe 3 trades a week if I'm looking at 3 pairs, but really just 1 trade. Not only just that, my chances of losing is so much lower, and then my winning rate is so much higher, and I'm going to win so much more. Does that make sense? All right. But when I take a 4 hour entry, that will be considered as my lowest time frame entry, the earliest entry. Okay. Like for you, you got your own business, even though you got your 4 hour intervals to wait for your price action. Sometimes you may not have the phone in your hand, even though you